Let's talk about what is going on right now. Look at my nail. Oh my God, I painted today. I'm sorry. Anyways, what's going on in the market? Why is it down? What is China doing? And what's up with Tesla and Elon and all that stuff? So let's speculate together. So what is going on with the crypto market in general? And what could be causing all of this? Let's preface this with, I'm not a financial advisor. This is all speculative and my opinion on things. None of this is to be taken as financial advice. Just putting that out there. So first, I want to take a look back at the last bull run, which, I mean, in comparison to where we are right now, looks like nothing. This was in December, January 2018. And then we just had this really long accumulation period. And then here's the pumps that were. Now, if you compare this to this, I want to look at this and say, well, this bull run is over. But with all the institutional money coming in and this rise of new retail investors that happened, I want to say partly because of the pandemic and all of the extra money coming in. So with stimulus check investment in cryptocurrencies remaining so stable throughout the pandemic, with general investments increasing overall, and with more Americans putting stimulus money into their savings, it appears Americans are looking for safe havens for their extra cash and experimenting with increasing their holdings if possible. Why not? Make some money on your free money. But I digress. Now, if we look at just the charts in general, our total market cap is over $2 trillion right now, which is crazy because it was definitely way lower than that last year. So the amount of growth that we've had in this last year has been substantial. So why is everything dropping? Let's start with number one, taxes. So taxes are due. Taxes have been due. They are due right now. And for people that get money back in taxes, we file the beginning of the year. But when you owe money, you wait. They wait till the last minute. And that's, I think, what's happening. So new investors discovering they have hefty tax bills to pay may be contributing to Bitcoin's fall. Some first-time investors are waking up to the fact that they owe capital gains on 2017's cryptocurrency trading profits and are selling the digital currency ahead of tax season. So what's liquid 24/7, 365? Crypto. So if you need some money to pay some of these taxes, you may pull it from there. Why not? Why not pay your taxes with gains? I mean, it makes sense. So here we go. During last year's rise in Bitcoin, some first-time investors had forgotten about the downside of making money off of trades. Taxes. Millennial investors are waking up to a looming April tax filing date, which some say may be contributing to the digital currency sell-off. We see here at the Wall Street Journal, the IRS is coming for crypto investors who haven't paid their taxes. On the hunt for tax cheats, Uncle Sam is winning court battles to force cryptocurrency exchanges to reveal their customers. Your big unreported profits on Bitcoin, Ether, or Doge, like those are the only three possible ones, could translate into a big problem with the IRS. Cryptocurrencies are exploding, and so is the IRS's pursuit of Americans who aren't paying taxes on them. With tax day approaching, it's a good time to clean up your act if you've been lax about taxes in crypto. Not doing so could compound future tax problems, especially if you've traded a lot or have more than a small stake. One of the reasons I don't trade is that I don't want to have to deal with the taxes on every transaction. Yes, I'm missing out on money, but I'm also possibly not losing money because some trades have gone south on, some people that I'm talking to. So it's a fair trade for me right now. 2 new IRS efforts to find crypto tax cheats stand out. In April, a federal judge in Boston approved an IRS summons to the payments company known as Circle and its affiliates, including Poloniex, to turn over customer records to the agency. And in early May, a federal judge in San Francisco approved another IRS summons for records to the crypto exchange known as Kraken. In both cases, the turnover applies to customers who had more than $20,000 in transactions in any year from 2016 through 2020. So they are backdating this. It's not even just a new thing. Like if you were making money in crypto a couple years ago, and even up to this year on the tax form, it just asked, do you or did you purchase any crypto assets? And that was it. That's all it asked. But now the IRS is realizing there are a lot of gains to be taxed here. So they're going all the way back to 2016 up to 2020. So a lot of people are getting audited and may have to sell off some of their crypto to pay for all of this. And that sucks. But it is what it is. With these summons and other actions, the IRS is mounting a full court press to show taxpayers how seriously it takes cryptocurrency compliance. Whew, says Don Fort, a former chief of IRS criminal investigation. Taxpayers should take it seriously too. Yes, unfortunately, yes. The Kraken and Circle summonses are the IRS's way of getting at information it can't get otherwise, while brokerage firms have to report many stock sales and other information to the IRS so it can check tax compliance. There's little to no such reporting required for crypto exchanges currently, which will be changing, I'm sure. This lack of reporting can make Bitcoin, Ether, and other cryptocurrencies attractive to criminals and tax evaders. And the IRS is determined to go after them. I'm sure they are. A spokesperson for Circle said the company expects to work with the IRS in responding to the summons. Of course, you're not going to fight with the IRS. A spokesperson for Kraken said, "We are concerned about governmental intrusion into our customers' privacy, and hope to work with the IRS in a way that protects our clients' interest." The judge has invited further briefing from Kraken. The new summons aren't the first of their kind. In 2016, the IRS received approval for a similar summons of the crypto firm Coinbase Global and obtained information for about 13,000 customers. The agency sent letters urging many of them to make sure their crypto taxes were paid, as the IRS might soon take a hard look. Dun, dun, dun. To justify the new searches of Kraken and Circle, the IRS divulged some research. Why can't I speak right now? The IRS divulged some results of the Coinbase campaign. In court filings, the agency said that it received more than 1,000 amended tax returns and collected $13 million from crypto holders, with more than $20,000 of transactions, plus another $12 million from other crypto notices, and audits are ongoing. Some Coinbase customers have entered the IRS's Voluntary disclosure program for taxpayers with criminal liability. This program usually lets participants out of prosecution but imposes large penalties. Yep, so people are having to pay right now. They're having to come out of pocket. The IRS also cited, without names, several taxpayers it's been examining who had accounts at Kraken and Circle. Among them, one person who didn't report more than 5.6 million of crypto transactions, most from a Kraken account, and another who filed amended returns as a result of the Coinbase search revealing 1.6 million in unreported crypto transactions. So this is a lot of money people have been making. You know, if they made money in the last bull run, then they're having to pay taxes on it now. When the judge in the Kraken case took issue with the broad array of information sought by the IRS, the agency responded by saying the information received from Coinbase was insufficient to identify 750 Coinbase customers who sold more than 100 million of crypto. Now, right now, as it stands, their majority of exchanges are KYC, which stands for Know Your Customer. So that means I have to put in my social, a picture of my driver's license, my firstborn, all that good stuff, so they can track everything that I'm doing. Well, then there are exchanges where you can exchange coins without any KYC information. So let's say I buy some XRP, or that one's had its own issues right now, but still, it's really fast. So let's say I buy some XRP and I want to exchange it for, let's say I exchanged it for some Matic, and I did it on SimpleSwap. Well, SimpleSwap is an exchange online, simpleswap.io, where I can put in one coin and exchange it for another coin. I just have to have somewhere to put that coin. So Let's say I exchanged it for Matic when Matic was 10 cents. And now Matic is worth $1. What is Matic worth? Matic is worth, oh, now it's Polygon, sorry. Boom, $2.49. So, and then I took those coins off of SimpleSwap and moved them directly to my ledger. So now they're in my wallet, my cold wallet. I didn't do this, but let's say I did. I'm just saying. So now, how do they keep track of that? SimpleSwap doesn't get any of my information. It's a very basic website. Yeah, crypto exchange, free from sign-up limits and complications. Let's say I get Aave. So I put in 1 Bitcoin, I get 65 Aave. All I have to do is put in my ledger address right here, or my wallet address. Now, if my wallet is on a KYC platform, then that's going to be listed. But if I move it directly to my ledger, I mean, I'm sure they're going to figure out how to do this eventually. So we'll see how that goes. They are right now requesting KYC information from everybody. So for the people that thought they could get away with all these trades on these platforms and nobody would notice, or that later, it wouldn't get backdated, that's what has happened. So be on the lookout. As a result, Kraken may have to turn over phone numbers and email addresses, as well as the customer's name, date of birth, taxpayer ID number, and physical address. The IRS is also asking for funding sources and movements of funds into and out of accounts, among other things. A Kraken spokeswoman said the details of the turnover haven't been completed. The IRS is requesting a broad array of information from Circle as well. An IRS filing also says, ominously for some, that the agency wants to compare the Kraken data it receives with data it has on offshore crypto transactions. It didn't identify the source of this offshore data, though. As Mr. Ford noted, the new searches are only part of the IRS's current campaign to combat what it thinks is widespread tax cheating on cryptocurrencies. What they mean to say is it's just a lot of money that they're missing out on, so they're going to find it. And that's what they're doing. The bottom line, if you've gotten a free tax write on cryptocurrency, don't count on it continuing. The IRS typically has until 3 years after a return's due date to assess its deficiency, but that expands to 6 years if income is understated by more than 25%. There are many exceptions. So there are many ways that they can come after you, is what they're saying. So what are taxable events in the United States? Selling cryptocurrency for fiat, so cashing out. Using cryptocurrency to purchase goods and services. Trading or swapping one crypto asset for another, either on an exchange or directly peer-to-peer. So if I have Bitcoin and I decide that I want to buy some Cardano, and I've had that Bitcoin for a little while now, and I want to trade it for Cardano. Once I do that, that has closed the Bitcoin transaction. I have now purchased and sold the Bitcoin, and then I purchased Cardano, even though I purchased it with the Bitcoin. But so whatever I sold the Bitcoin at to purchase the Cardano will reflect my gains, what gains or losses I had on that Bitcoin from when I purchased it to when I traded it. Income tax events include receiving cryptocurrency from an airdrop, which, we didn't ask for. Just let me keep the money, man. Any crypto interest earnings from decentralized finance, DeFi lending. Crypto mining income from block rewards and transaction fees. And crypto earned from liquidity pools and staking. So any interest you're earning while staking is, of course, also taxable. And receiving cryptocurrency as a means of payment for carrying out work, including bug bounties. Do you know what that means? I don't know what that means. Oh, next. So besides taxes being first of the issues with what's going on here, let's jump right into Elon, because of course, he's got something to say about everything. So Tesla stops accepting Bitcoin, citing great cost to the environment. The cryptocurrency's value sank. Big story was that Tesla accepted Bitcoin and then decided we're not accepting it anymore. but has mentioned that they're not selling any. Now, part of the reason I think they're not accepting it is because people weren't paying with it. People are holding Bitcoin. They're not trying to buy it and then sell it to go buy a car. It's funny that it was such a big announcement, seeing as how I don't think they ever had to accept it because I don't think anybody paid in it. But that's neither here nor there because I don't know those facts. Again, just speculating. But he says it's a great cost to the environment, which, I mean, so let's not even talk about where he gets all of the stuff for his Tesla batteries, because that's an issue. But I digress. I will leave that for later. Then it shows that 76% of crypto miners use renewables as part of their energy mix. Oh, who would have thunk it? So I would assume, being the smart man that Elon is, he did research in Bitcoin before accepting it, and he would know this. So the study found that over 39% of total energy consumed by proof-of-work cryptocurrencies, including Bitcoin, Ether, Bitcoin Cash, and others, comes from renewable energy sources. According to the latest study, hydroelectric power is the most common source of energy for miners. Almost 62% of miners are reported to be using hydroelectricity. Coal and natural gas sources take the second and third spots at 38 and 36% respectively. So being a Bitcoin miner, you're going to go where the energy is the cheapest. So yes, China right now with the hydroelectricity has a pretty good market on cheap energy right now. They could pack up and leave whenever they want, but if you are mining and you want to make the most money out of what you're doing, you're going to do something like that. So, but either way, then wind, oil, and solar energy are the three other common energy sources for cryptocurrency miners. So I don't know, could Elon decide to start using his solar panels and try to bring miners over here to use his renewable energy? I don't know. But there's always a reason behind everything. Exclusive, Tesla seeks entry into U.S. renewable fuel credit market, hoping to profit from the Biden administration's march toward zero emission goals. Two sources familiar with the matter said. So I'm thinking maybe they told him that using Bitcoin wasn't good for the planet, because Tesla makes a lot of money from these tax credits. So it's funny the timing of this, where he says that he's not accepting Bitcoin and then is seeking entry into the U.S. renewable fuel credit market. Now, if you didn't know, Tesla makes a lot of money in revenue from the sales of regulatory credits. Just right here, Tesla ranked in $518 million in revenue from sales of regulatory credits in the first quarter of the year, helping the U.S. electric vehicle maker post another quarter of profit. Now, these credits are given out as a push to reduce carbon emissions. Governments around the world have introduced incentives for automakers to develop electric vehicles or very low carbon emitting cars. Credits are given to car makers that build and sell environmentally friendly vehicles. So I don't know if him accepting Bitcoin maybe would have messed this up for him, but I do know he applied for it and he's getting it. Bitcoin drops after he suggests Tesla may sell holdings, which he did in tweets with this crypto whale guy, and it just made it seem like he might sell his Bitcoin, which, I mean, sell it. If you want to sell it, I don't care. Like, that's fine with me. You don't have to be in on it. He's got enough money anyways. It took it down some, but I don't think he was everything. I think it was all timing and tax time, and then what we're going to talk about next. So I don't believe that Elon was the end-all be-all for Bitcoin, but I don't think it helped. So now let's talk about China. So China cracks down on crypto business, saying speculative trading seriously infringing on financial order. Chinese financial officials announced Tuesday that the country would crack down on financial institutions conducting cryptocurrency business or offering related services in light of the market's recent volatility, marking another blow to the nascent market reeling from one of its biggest sell-offs after booming institutional adoption helped lift it to meteoric highs during the pandemic. So in a joint statement Tuesday, 3 Chinese industry groups overseeing the financial sector announced that bank and payment institutions cannot conduct business related to cryptocurrencies, specifically banning a slew of activities including cryptocurrency registration, trading, clearing, and settlement. The guidelines, which reiterate a previous ban from 2017, also bar financial institutions from accepting or using cryptocurrencies in payments or settlements, developing digital currency exchange services, and offering any such services to clients. So they're really shutting their banks out of all of this. Now, is it because they just want everybody to use the digital yuan that they're launching? Maybe. Makes sense to me, because as we see here, China aims to let foreigners use digital yuan at Winter Olympics. So what they planned on doing is when you get to the Olympics, if you go to the Olympics, when you get there, they will be giving you digital yuan to use while you're in China. And then, of course, you would bring it back. So China's central bank is looking to enable foreign athletes and visitors to use the country's digital currency during the Beijing Winter Olympics of 2022, according to top central bank official. Li Bo, deputy governor of the People's Bank of China, said that the upcoming Winter Olympics could potentially become the first test of China's central bank digital currency, or CBDC, by foreign users. For the upcoming Beijing Winter Olympics, we are trying to make e-currency available not only to domestic users, but also to international athletes and like visitors. Lee said Sunday at the CNBC panel, the bank previously announced its plans to test the digital yuan at the event. That's their plan with their coin, and they're not letting any of their banks or institutions have any part in any of the other cryptocurrencies. So could that be part of the sell-off also? I'm sure people were already getting into it institutional wise, and now if it's banned, you're going to have to get rid of it. So that sucks. But it's funny that this news came, and I feel like it was around the same time that the president said that we may boycott these Olympics because of human rights issues. Which, I mean, okay. But these human rights issues, whatever's happening, has been happening. It's been happening. So for them to just now say that we may boycott it, I think is kind of a way to rein in their power on the digital yuan, because if they are the ones that get it out there first and get it being used first, they will have a good control on the crypto market in the digital currency form, like digital, not just the crypto market, but actual digital currencies. So we'll see how that goes. I'm interested to see how that goes. So yes, the China news is old and being brought up again, but they did add a couple more things. They're closing some loopholes. And so you can't even trade or sell your Bitcoin that you have. It's just a big issue over there right now. But, which is funny because they had such a hard push to get miners over there, and now it's like those miners can't spend their Bitcoin there. So what are they going to do? I don't know. Just for a minute, take a look back at Amazon stock. Today it's down, but it's worth $3,200. I mean, if you go down the chart, you see this big bear market pretty much from when it started, and it started, what's that, $1.73? Imagine being able to have bought it then and then just rode it out to here. I see this as a big shakeout to get the prices down so that they can all buy in at a discount, because there's so much happening with crypto right now that it can't be denied. And now look at this. Could DeFi powered banks become an unstoppable force in finance? So Bitcoin didn't really threaten anything. Bitcoin came along and it didn't threaten the US dollar because it's like digital gold. So it is not helpful in the currency system in that sense. But DeFi is coming after banks. It's like a driverless bank. You don't need anybody. It's all trustless contracts and being able to get money without having to go through anything or anybody. That is what is going after the banking system, and that is when things will start to get interesting, because that's when they're going to fight back, and that's when all these regulations are going to come in. And I mean, right now the only things they can really regulate are KYC regulations. They can make everybody have to have that KYC check mark before they can do any DeFi financing or loans or anything like that. But besides that, like, you can't regulate code. So I don't know how that would work. But as it looks right here, banks may be trying to partner up with DeFi so that they don't get left behind. Because of course, you know, they all want their money. They all want their money. And with this crash right now, it's all because of greed. And that's what, you know, sentiment drives the market. And it is what it is. But I really do believe if you hold out, you'll be okay in this. I believe this is why they went after XRP first, for regulatory reasons, because XRP was trying to take over, or is trying to take over, or is taking over, see how this goes, the Swift Money Network. And the banks make a lot of money on that annually. And so for XRP to come along and go, oh, well, now I have this currency that will get there fast and cheap, and it's highly liquidable because we have on-demand liquidity. So, like, that would scare me as a bank owner. You know what I mean? Like, these Rothschilds, and I'm sure they're worried. And so that's why the SEC is going so hard after XRP to regulate them, because that's the one that was going to come for the banks first. Now, they weren't coming like DeFi in that sense. That's still a whole nother, that's going to be a whole nother SEC issue, I'm sure. But XRP was coming to take a lot of money. So now they want to work with XRP, and they say, well, we just need to regulate you. You need to work with us the way we want you to work with us, and then we'll do it. So, you know, it's all a cat and mouse game. But then we also have news like this. Just came out on the 19th. Wells Fargo to onboard active cryptocurrency strategy for rich clients. So it's not for everybody, is what they're saying. So Wells Fargo & Co. said on Wednesday its investment institute is planning to evaluate and onboard an actively managed cryptocurrency strategy for its wealthy clients, the latest move by a major U.S. bank towards accepting digital currencies. So everybody is still moving forward with things. Like, if you look at the good coins and what they're doing and who they're partnering with, it is all still moving forward. This is just a setback. And the way that they can put FUD out into the market so quickly and get everybody to sell like this, the same way Elon can tweet about it and something, you know, they're going to use that to their advantage. Bitcoin drops to 36K, triggering 8 billion in liquidations. I mean, if you don't think that has a lot to do with this, like, that's $8 billion that was liquidated just because of margin trades. That's going to affect a lot. Like, that's big. And, you know, those people lost money. So that sucks for them. But, I mean, when you play the trading game, that's always possible. And that's why I don't play it. And then, of course, as everything falls, the exchanges have technical issues and you can't get in or out or move money. I can understand it getting overwhelmed with you know, everybody trying to get in and buy or sell. It's going to have issues on either side. These are things that they're not used to right now. Like, they have never had this many people on their exchanges. It has just gone up in the last year. So they're going to have to work through these kinks, and it's going to take time. But I still think it's a good long-term hold. Of course, I would have loved to have been rich this year or next year. But I mean, if it takes 4 more years, in essence, that really just gives me more time to buy more, because that's what I'm going to do. I dollar cost average in, I buy every time I can, and I buy it at whatever it's at. So my averages stay pretty good. So yeah, the exchanges are going to see issues right now. Now, I mean, do I know that this isn't the end of the the bull market? No. Do I know that by any means? No, like I said, I'm not a financial advisor. I do think Bitcoin will hit at least 100 grand by the end of the year. But for now, this is what's happening. With all of the institutional investors getting on board on our end of everything, you know, in the US, I don't know. I still see it happening. I see a lot of FUD happening and people trying to, in the news markets, trying to put stuff out to get people scared and get them to sell and lose their positions. And whatever reasons they have for that, I'm sure are good for them and not for us. But just take a step back and look at the bigger picture and know that things will get back to where they were and higher, I do believe. I mean, everywhere you look, there's bad news about the crypto market and how you could lose your money and it could all go to zero and everybody watch out. I just don't think that's where it's at. I think we'll be okay. So those are just a few of the reasons that I think the market is down right now. Will it come back up? Yes, I think so. I mean, I think that we still have a long way to go. Everything is still growing. And like I said, as things are getting used and new updates are coming out and news is being dropped about people partnering up and different reasons for different coins to be doing good, they're still going to go up. So just hold on to your seats, guys. Calm down. I think we'll all be okay. And buy the dips, unless you're buying crap coins. But that's financial opinion, not my advice. Just what I would do. Until next time, make good investment decisions.